We're diving into the world of finance to help you understand how to read and interpret financial statements. Whether you're a budding investor or just curious, knowing how to decode these documents is crucial. First, let's explore what financial statements are. Essentially, they're records that outline the financial performance and position of a business. The three main types you'll encounter are the balance sheet, the income statement, and the cash flow statement. Let's start with the balance sheet. This statement provides a snapshot of a company's assets, liabilities, and shareholders' equity at a specific point in time. Think of it like a financial selfie. Assets are what the company owns. Liabilities are what it owes. Shareholders' equity is the residual interest in the assets after deducting liabilities. Remember, assets equal liabilities plus equity. Next, we have the income statement, also known as the profit and loss statement. This shows the company's performance over a period, detailing revenue, expenses, and profits or losses. Begin with the top line, which is the total revenue. Subtract the costs of goods sold to get the gross profit. Then deduct other expenses to find the net income. This statement helps you assess the company's ability to generate profit. The third key document is the cash flow statement. It shows how cash moves in and out of the business over a period. It's divided into three sections: operating activities, investing activities, and financing activities. This statement is vital as it provides insights into the company's liquidity and financial flexibility. When reading these statements, look for trends in financial data over time to assess growth, stability, and potential red flags. Compare them with industry peers to get a context of the business's relative performance. Finally, remember that financial statements alone don't tell the whole story. Consider qualitative factors such as industry conditions and management effectiveness. By combining these insights with quantitative data, you form a comprehensive view of the business.